All right. Today is a special episode of CREPN Radio. Normally, we post episodes once a week on Thursdays, but given the COVID-19 and the CARES Act, I thought it was a good idea to get somebody that could speak to the funding that's available through the CARES Act and how it might apply to you. And so I've asked my friend, a returning guest, Jonathan McGuire. He's with Aldrich Associates. He's a CPA, specializes in real estate, and we're going to get into it here. And with that, Jonathan, welcome back to CREPN Radio.
Well, thank you for having me back, and very very timely indeed with everything that was basically an 800-page bill dump on us with the CARES Act. So um, lots of good stuff for the taxpayers in there, as well as especially for those in real estate, both on a lending side and just on some tax consequences. So
Right. So um, I've read the. I haven't read the whole 800 pages because there's clearly a bunch of it does not apply to myself or a lot of my customers. I think like there's airlines and some of the stuff at the bottom of the act that were clearly industry specific kind of
mhm.
thing. But as I read it, and again, it reads very similar to like an insurance policy. There's clauses and reference points, and the circular kind of a way these things go. So if you're not well versed in it, it seems like a lot of extra effort to try and understand what it is. Um,
Mhm.
but I was hoping that maybe you could provide some clarity because um, the different uh, people that have raced out to get in front of this, I think, have maybe interpreted it in a certain way, and I think also some of the stuff I've seen is referencing the prior SBA programs, and so some of it, I think because there are some existing programs in place, but I think that this CARES Act itself is a unique, different animal, or at least a version of the SBA lending capabilities. And there's some streamlining that's been introduced to try and get the money out to the people.
Mhm.
Um, so based on that, I'm wondering, can you speak to the different levels of the program? And I think are there not like some specific titles? I mean, I've heard the PPP and the EIDL and
Mhm.
so maybe if you can start
Yeah.
there.
Yeah, so there's two primary loans that are out there. The first is a paycheck protection loan, part of the Paycheck Protection Program, PPP, what we'll call it for this. And then there's also uh, the economic injury disaster loans, which typically you wouldn't see uh, a virus as something that would qualify for one of these types of loans, but they're saying that it will be uh, effectively what it is. So we have uh, the PPP loan is is a bona fide SBA loan that the intention of it is to cover salaries and costs of operating your business, even though you may not necessarily be open for the next 8 weeks or so. And so generally, the way that you're calculating this PPP loan on is you're looking at your last 12 months, so April 1st through March 31st, taking a look at your total payroll uh, for that 12-month period. Each individual is limited to $100,000 of salary that could be utilized in this calculation, and then you could have somebody with 70, somebody with 125. You're not going to get to average those out. You're going to be limited to 75 and 100 for each of those people in calculating your total annual salaries. Then divide that by 12. That gets you to your deemed monthly average monthly salary, and then multiply that by 2.5, and that tells you what your loan effectively can be. Um, so uh, I've I've been trying to help some of my clients figure out how to do just how to estimate what sort of loan amount they would be eligible for. Uh, Not something that I typically would be doing, as I'm primarily focused on income tax. But one thing that we're finding is the banks don't entirely know the program or understand some of the ins and outs of what actually is wages, and so we're coming in to assist our clients so that they can assist the bank in figuring out how to do their application. So I never thought I'd be putting a lending hat on, but hey, this is coronavirus quarantine. So
Yeah, no, and just to kind of make sure I'm clear on this, you mentioned uh, the payroll. Is the payroll the sole determinant of the PPP amount? I mean, because I saw some other things that are referenced that you can use the money for, but in order to determine the limit, is the payroll, is that it?
that pretty much is, from my understanding, you can get up to 2.5 times your average monthly payroll costs, or 10 million, whichever is the lesser of the two. So it caps out at $10 million per business. Um, I have a client who they have 392 employees. They paid, I think, about $11 million of wages last year. If you take out the limitations there, which the owner and then his primary manager, that takes probably 2 million off the top, but still 8 million, divide that by 12. Got my calculator here. Maybe 8 million divided by 12, that's about 660,000. Multiply that by 2.5, you're going to qualify for about a $1.65 million loan.
Got it.
So, and the beauty of this loan is if you spend it down in the next 8 weeks after receipt of that cash, um, and you use it to pay for payroll, as well as keeping the lights on, and paying rent and stuff like that, the business will be able to um, survive, keep the lessers whole during this time where they otherwise wouldn't have cash revenue or just cash flow period to pay their rents for the landlords. And at the same time, it's a forgivable loan. So if if you maintain certain qualifications, you're going to get this loan forgiven in 8 weeks, tax free. So it's effectively a free stimulus check from the government for your business if you meet the certain qualifications.
Got it. And so if I just kind of decode this, so if I do the calculation, I take the payroll times 2.5 times, that would
Mhm,
be the loan amount I can apply for.
mhm.
The other things that are referenced in there, the rent, mortgage, utilities, are those in addition to, or is that just part of what the money can be used for?
That would be part of what the money can be used for.
Okay.
Um, one caveat, though, to get the loan forgiveness, which is why a lot of people are going for the PPP loan, um, is that I think uh, this is new, so I might have my facts wrong here, but I believe up to or at least 75% of that loan value must be used to cover payroll for that 8 week period, and then the remaining 25% can be used for um, rent, keeping the lights on, you know, paying paying taxes, insurance, making repairs that need to take place. What it can't be used like, one of the big things that have been talked about in the media would be like stock buybacks. Like
Right.
you can't go buy back stock with it. Um, the other thing though that hasn't been talked about is if you get one of these loans and then you do proceed to lay people off anyway, um, a portion of that loan, depending upon that salary reduction that happens because of those people getting laid off, it's going to limit the amount that is eligible for forgiveness. So there's uh, there's some rules there that say, hey, if you want this loan, you actually need to physically keep people hired, or at least be able to bring them back on rehired by the end of I think it's June 30th is when the testing dates end. and that that way you can get this loan forgiven. Because either way, I mean, I would much rather have a forgiven loan and keep everybody employed for those 8 weeks than take this debt on, let some people go, and then have to go in and repay it back at some later date.
Yeah, no, that would kind of defeat the purpose. You've got money now that, and you didn't keep your people on, so now you've either got to rehire or find new people, or you may not even be, able to fully repay your loan there.
Mhm,
Um, so okay, but just I think what you clarified for me here, real quick, was it just the calculation? Because I think sometimes when I read it, it dwells on the payroll, and then it mentions these other things, but it's at 2.5 times the payroll.
mhm,
That half, I guess, is actually designed to account for those other things outside of the payroll. So your
mhm,
mortgage, rent, utilities, whatever that might be. Is that kind of
mhm.
your take on that?
Yeah, yeah,
Okay.
that's yeah. Um, some other little tidbits on this is uh, there's a 6-month deferral on your required payments. So once you get the loan, you have up to 6 months of deferral if for some reason the loan is not forgiven. So it can be that can be of benefit there. There's also, I believe it's a 2-year term, and the interest rate on it is 1%. So even if you can't, um, uh, if you're not going to be able to qualify for the loan forgiveness, it's still relatively cheap short-term financing at 1%. I mean, a 2-year loan on that at 1%. Hopefully, when everything recovers, you can make the payments on that. But uh, I could see some people going to get this loan, not really having payroll, but wanting to take this on because, hey, I can I can get some short term debt at 1%, and you know pay off some other short term that's at 3, 4, 5%, and basically do an interest rate swap. So
Right, right. And with 2 years to pay it back, you could uh, make that work pretty well. Um, and the what was I going to ask you on the qualifying? So I mean, essentially, if you've got employees, this is pretty much the vehicle that
mhm.
looks. I mean, the direction one should look. Is that kind of the sum of your understanding?
Yeah, it's probably going to be the best short term stimulus type option for small employers I because one other thing too is since it is an SBA loan, you have to have less than 500 employees to qualify for this. If you have more than 500, like a McDonald's, isn't going to go out and qualify for this. Um, a Macy's, an Apple, any of those, anything that's probably publicly traded on the stock exchange, they're not going to go after the PPP loan because of
Don't
their number
qualify.
of employees. So
Yeah. Well, that makes sense, based on what I've come to understand. Um, okay. So is there anything more to that, the PPP, that you understand as far as I mean, is this, and then let me back up here. Is your
mhm,
understanding this is a loan?
mhm,
You specified all of these are quote loans with
mhm,
the option of forgiveness.
mhm.
Um, to get this loan, you have to go to an SBA lender.
Yes,
Is it? Okay,
yeah, because it is a loan through SBA. That is where you have to go for that. So
got it, got it. All right. Should we move on to the uh, is it economic income disaster loan? Is that the EIDL?
yeah, injury disaster loan.
Injury.
Y-
Okay.
Yeah,
Economic
yeah,
injury. Oops. Yeah.
yeah, yeah, yeah. So this one is a little different. Um, uh, One thing that you can do is just by applying for it, you can get up to a $10,000 emergency cash advance on this loan. Um, uh, so that's if you're needing capital today, especially if you're a landlord and you've got tenants that think they're going to stay open after all these closures end. here's a really simple, quick way for them to get access to cash, to uh, if we're looking at this from a retail perspective, to be able to cover everything. So, um, hold on, my video crashed on me.
I can see you.
There we go. Okay, it went to a different screen. That's why.
All right.
um,
We're zooming.
so yes, um, on the EIDL or idle, another way to put it, you can, on top of that $10,000 cash advance, you can also borrow a total up to $2 million. Um, there's no loan forgiveness on this, so that's one thing that's different from the PPP loan. This is a bona fide loan that has to be repaid. I don't remember the the loan terms, but the rate on it is three and three quarters. So uh, relatively cheap interest rate per se, compared to some other bank loans out there. Um, as far as I know, this is not actually an SBA loan. It's something that is separate and set apart, outside of the SBA arena. Um, there's about 2 to 3 week application review period, so it is going to be find out if you do qualify. However, that $10,000 cash advance is still available. So while you wait to say go get your 500,000 or $1 million loan or however much you're going for, you can still get that $10,000 cash advance within a couple days, as I understand it. Um, the only other thing with it, though, that may not be attractive is a personal guarantee is required on this loan. So whoever is applying for this loan, there must be a personal guarantee from an individual in the business, or if it's a C corporation, I think that's a little bit different. But if you're a small business set up as like an S corp or some sort of partnership or sole proprietor, you're you're going to be obligated to put a personal guarantee on this loan.
Now, where are you looking to find that information? Because I am, the reason why I ask is uh, again, I've been reading and others have been providing other things that I've been looking at, but I've come across the streamlined, um, the COVID-19 economic injury disaster loan application.
Hmm.
Um, and what I'm led to believe is that while all of the things you just said may be true as far as um, the potential for requirements, my understanding is that they've also allowed for some of these to be waived. And I don't know. I'm just, again, this is one of these things where I'm getting all this
Hmm.
information. I'm just trying to, like, pull it apart and make sure that I'm
Hmm.
I'm understanding. Are you?
Yeah, it's I just pulled up the EIDL fact sheet here just to make sure. Um, One thing, I guess it actually is an SBA loan, so I misspoke earlier. It is part of SBA. You can actually get up to $200,000 without a personal guarantee. So
Okay.
that if you want to go above that, there is a personal guarantee requirement.
Okay, because I was going to say I know this is all kind of moving fast and changing
Yeah,
moment by moment. I mean, I saw
yeah.
stuff on Friday that's already out of date on Monday.
Oh, yeah. They
Yeah.
they issued uh, after everybody posted everything of what the guidance was going to be Thursday night and into Friday morning. Overnight, SBA came out and said, "Hey, we're changing the rules," and they it's mainly on the PPP loan, but like one of the things was they increased the interest rate from 0.5% to 1% on the PPP loan if interest is actually going to be charged if it's not forgiven. But that was like one of a multitude of little things that changed in the fine print details of the loan. And so it's what we kind of think we have a good idea, a good handle of how it's all going to work and interplay, but until we're probably, another week or so out, we're not going to have a truly solid understanding of some of the inner workings of what's going to happen with these, especially even with what the banks are going to do. Like, who was it? Wells Fargo came out today or it was yesterday that said, "Hey, we're capping our loan amount at that we're going to do at 10 billion," and they shut it off after that. So effectively, Wells Fargo is out of the game if that was one of your where you had a banking relationship.
Meaning that they in total, not one loan, 10 billion, but the most that they did, they took in 10 billion worth of applications, and that's what they're doing.
And they're quitting after that. And why they're doing that, they probably have their banking reasons, but I'm not entirely positive as to if there's logic behind that, if it was just we don't understand this, we don't want to be on the hook for it, or there was potentially there was a risk profile they were considering because since these are being guaranteed by the Fed, whether the Fed will actually come through and pay them off, or whether or not the people applying for these loans are even credit worthy to begin with,
Right.
even though they're guaranteed. And so it's we're kind of left scratching our heads like, why would a bank do this? And so what does Wells Fargo know that, like a Chase or a Bank of the West or somebody along those lines doesn't know? Because it sounds like Chase and Bank of the West are two examples of ones that are really pushing these hard and are saying, "Hey, come on in, we'll take care of you even if you don't have a current banking relationship with us." Um, that's what I've heard from third parties. So I don't know if that's a verifiable statement of fact, but that's the rumor mill going around. So
Yeah, well, it's as credible as the rest of this, I suppose. I mean,
yes.
based on everything we're seeing, the I think one of the things I'd like to touch on here real quick, if we could,
Mhm,
is the different entities. I think a lot of real estate investors I know, either they start out investing as just themselves or themselves and their spouse,
mhm,
maybe buying a couple rentals. Then maybe they get into some commercial property, larger properties. They create an LLC. In both cases, they don't have any employees,
mhm,
versus where if you go larger and you have some property management people or just some staff, some maintenance staff, then clearly that's a different picture. But I mean, even so, if you've got issues with collecting rent from your tenants, it's more of an expense model in mortgage than it is in the payroll side of things. That
mhm,
kind of when you go through the payroll of 2.5 times, maintenance tech, even if it's 50 or 60,000 a year, that's not going to get you to any kind of a sum that'll help you in a big way, kind of thing. So it seems like
mhm.
for a lot of property owners, the EIDL loan may be an easier, more direct route, more kind of a certain thing.
Yeah,
Um, is that kind
yeah,
of your take on that?
yeah, because the EIDL, it doesn't have a uh, a payroll uh, test associated with it. Um, One thing with the PPP loan is if you have um, self-employment income, which that's not going to help you if it's rental, but if you were just a sole proprietor and you had like your own property management company that you would report on a Schedule C, um, that you can use that as a way to qualify for the PPP loan as a substitute for the idle loan. Um, the one thing though is the for businesses with payroll with wages, their loan period, the first date for application was last Friday, April 3rd. For the self-employed individuals, it actually doesn't start until this coming Friday, April 10th. So that's one little thing there that that they were trying to take care of the people with wages first because that was going to have a bigger impact overall on the amount of people that the government could come in and help. They wanted to help wage earners, and then after that, the remaining pool of money, if any, we'll see based upon how fast these things get processed and applied for, what is left over for the self-employed individual to come out and get.
Yeah, you mentioned the if anything's left over. That's not really too encouraging based on the
there,
kind of the fear
yeah,
of missing out seems to be pretty large right now with everybody scrambling trying to get
yeah.
some sort of help.
I think it was. I think there was what, like 400 billion that was allocated from this for the PPP loan, and I don't remember the exact number, but from my understanding, is the expectation is that's going to get swallowed up relatively quickly as I mean, this is having a major effect on a lot of small business. The economic closures is having a major effect on a lot of small businesses throughout the country, and so we're going to see a lot of small businesses go out and apply for these things because it's going to give them that capital to make it through. And it's kind of going to be early bird gets the worm, and whoever that early bird is going to be able to walk away um, staying alive, and the other people that are late to it might not stay alive, and that's kind of one of the risks that we're running into. And one thing with at least with our clients, we've been trying to last week, every, all of our partners, managers, and stuff inside of our accounting firm, as well as the wealth advisors and benefit advisors, they were all on the phone talking with our clients. Hey, let's get ready, let's prepare for this. We need to figure out how to press go on this on Friday. That way you can go get your loan and make sure that you're safe and sound through these next 2 months. Because it was also kind of a, hey, if you know, one thing, we want to be the trusted advisor for our clients, and so if we can help them in any way. But two, kind of in a, this might seem a little selfish, but we want to keep our clients and keep our clients in business. And so it, by making sure that they were aware of this capital infusion that could happen, it was doing both them and us a favor at the same time. So
Yeah, I'll give you a pass on that selfish thing because I know at this point, I mean, I'm in a similar boat as an insurance agent. I've had to tell many clients that the business interruption that they've thought might apply through their policy. That's not my understanding. That's not what I've been told. The policy is designed to cover. The coverage is more about if you have a fire or a tree goes through your roof and you can't operate from that location or something like that. So I've been trying to learn as much about this so I can share it with my customers so they have some sort of direction on where they can go for some relief. And I just feel like the information that's been put out there, it's just there's so much of it. First of all, and it seems like it's more in a theory concept as opposed to a, here's how we're going to get the money to you. And now we're kind of working through the here's how the money's going to get to you kind of thing. Because even the dates, you mentioned Friday was the first day. Is that for the PPP or was that for the?
that was for the PPP. I believe the idle loan is already up and running. Um, I can't say for sure. But I know that at least for the PPP loan, the first date for applications that banks could take it was April 3rd, and that was for businesses only.
Gotcha. Um, all right. So the basics again, just to kind of summarize this, if you have payroll, period, you're probably best to start with the PPP program, which is going to require that you go to a lender, and probably not Wells Fargo because they've got all the loans they can take.
Yep.
And with that, are you aware of will there be any proof of the information required when you apply for the loan? Do you have any sense of that?
From what I've been told is there's something that you have to a statement or something that you have to sign that says, um, one, this is my actual payroll based upon what's um, on my 941s. That's the payroll tax form, as well as I intend to use these loan proceeds to keep my business. But basically, a promissory statement saying that I'm going to use this to pay people
Right.
and keep my lights on. So,
Gotcha. And then as far as the other option, if you don't have any employees, the Economic Injury Disaster Loan (EIDL) program is the way to proceed. Um, you mentioned in there the $10,000. I don't remember if that was like a fast cash or what that was that you were
mhm,
saying. Is any of that considered potential grant, or is that basically? Because I've also heard some things that suggest that there was like some sort of a grant, or a
mhm,
potential. You could apply for it as a loan, but if you needed, they would give you $10,000, up to $10,000, just to kind of
mhm.
get you through, kind of thing.
Yeah, yeah.
Is that
The in terms of grants, I know there's it 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 is an emergency grant. There's no obligation to repay the grant. However, you could still be excluded. You could receive the grant and be deemed ineligible for the loan. So that's one thing that's there. At the end of the day, they uh, for for the scope of what this is, a $10,000 grant is probably de minimis um, towards the. I mean, we're talking $10,000 versus 400 billion. So um, they're just saying, hey, it's one way to say we're going to give this handout to help people truly in need and make sure that they're staying in business, keeping people employed and whole.
sure? Well, and I think one of the things, again, just to kind of frame this. One of the things I've had conversations with is, again, landlords. Rent's due on the 1st. We're recording
Mhm,
this on what's today, the 6th. Um, there's still a lot of, there could be some stragglers as far as paying rent. You really don't know what the potential damage is.
mhm,
So to try and, I think that if you can apply for it and you can receive that $10,000, it would be a nice buffer to at least kind of get you through those unknown times, and especially depending on how long this could linger, or
mhm.
how long this will go on. Um, let's see. There was something else I wanted to ask you about the. So we've got the $10,000. You can apply up to the $200,000. Um, do you know anything about the repayment on that? You mentioned. Do you know any kind of about terms or whatever? If it's
Yeah, I've since got an update on that. It's a 30-year term on the idle loan, and it's at 3 3/4. If you're a nonprofit, nonprofits can actually take advantage of this as well, and their rate is reduced to 2 3/4.
30 years, that's huge.
It's yeah, I mean it's basically at the rate of a 30-year fixed mortgage right now. So
Yeah, no, that makes you think twice. But okay, so um, do you have any advice, or kind of, if you were, speaking specific to customers that are or potential customers that are um, real estate investors? They've got
mhm.
properties. Again, like I said, there's this unknown. Would you advise them to, pursue this as as a means of kind of a safety net, rather than burning through cash?
Yeah,
And
yeah, I would definitely say if you have payroll, um, go after the PPP loan because that's something that can it's if you meet the requirements, it's effectively a grant once everything's forgiven, and so 100% worth it. Uh, If you don't have payroll, then you're definitely looking primarily at the idle loan, just because that's your next best case scenario there. Plus, it's going to get you that emergency $10,000 grant up front to make sure that your April mortgage payment, or May, depending on where your cash position is made whole. And I think it's going to be more important to have that probably in May because of rents generally being collected first of the month. Um, I would assume the mortgage payment's probably done first of the month too, and you're keeping cash on hand to stay liquid to cover everything. Um, I would hope that people would have enough cash on hand just to make their mortgage payment for April. And now I think the landlords are probably going to really start to feel the heat, especially now with. I mean, if you have like a Petco or PetSmart as a tenant, they said they're only going to pay 20 or 25% of their rents for the foreseeable future. Cheesecake Factory not paying a dime in rent for the foreseeable future, and I mean, whether or not you can evict them, or do you even want to evict them, I don't know. But I think the hope is that this is just a 2-3 month temporary blimp on the radar screen from a real estate perspective, and as things start to come back online, the first people that are going to be made whole are is is the place that you have your place of business in, because you want to have that sign on front on Main Street to attract people in. You don't want to be um, but behind, not operating, trying to do everything web based. Once everything reopens, at least from a retail side, you got to have both presences. So.
Right. No, I think the gravity of the situation is not really understood from a landlord perspective. I think so much of the communication has been directed at the employee who's been displaced because the employer was shut down by the government, saying you can't congregate, you can't have people here. So you get your restaurants and bars were effectively the front or the tip of the spear.
Mhm.
Then you go through your hospitality, your hotels, airlines, and
Mhm.
those are, clearly most of those probably have more than 500 employees and are definitely in a different category. But I think the trickle up, if you will, from the standpoint of a lot of those employees are housed in apartments or rental
Mhm.
dwellings, where you have landlords, um, very small business, mom and pop kind of operators to significant size operators. Um, and, the hope is that, well, the reality is I think a lot of the tenants are essentially based on their wages, and the cost of rent are basically hand to mouth. And you've basically said, you know, that's it. You got nothing.
Mhm.
And so there's not like a couple months of savings to see them through this kind of thing. So it's the ripple effect, the trickle up. Now you've got the landlords affected. Now they have to have conversation with their banks. The banks are offering forbearance or some sort of deferral kind of thing. But
Mhm.
arguably, if you can avoid that and you can stay on your payment schedule, I think that would be preferred. But if you have to drain your capital reserves, that's not uh, a good plan, because what else? What if something else happens and you need that money, kind of thing. So I think this is the more I'm kind of getting into it, the more I'm understanding. And I appreciate you kind of walking us through this. It seems like the line you've drawn here is pretty clear, that if you've got employees, PPP. If you don't, the other is a good way to go. And if nothing else, some sort of capital preservation
Mhm.
uh, kind of
Yeah.
thing. Um,
Um, there, there's also some other changes that have happened with the CARES Act, focusing on tax law changes that also could not necessarily immediately give you access to, but allow some access to capital through tax refunds. Um, a couple of things that changed were there's if you're familiar with the old qualified leasehold improvement rules, those were repackaged back in 2016, 17 as qualified improvement property, or QIP. And once the Trump tax cut came in, QIP was still on the books, but due to a technical error, they had it listed as 39-year property instead of 15-year property. And so that slowed down the depreciation by more than double. And by putting it into that 39-year bucket instead of the 15-year bucket, it wasn't eligible for bonus depreciation. One thing about these rules is they are actually retroactive back to 2018. So if you wanted to, you could either amend or do what's called a change in accounting method and apply to have that, or to have those property lives from 39 years reduced to 15 years, get 100% of that as bonus depreciation rather than spread it out over 39 years, and then use that to reduce your tax liability in 18 and 19. So that's one huge benefit. Another
Gotcha.
thing that happened is one part of the Tax Cuts and Jobs Act was for net operating losses. The rules for 2018 going forward is that you could not do a carryback of the losses. You could only carry them forward. As part of the CARES Act, they have suspended that rule, and you can now carry back up to 5 years. So I have a client, 2019, we were just about ready to file his return. He ended up doing a cost segregation study, and we broke out some 39-year property into a 5-year bucket and a 15-year bucket. And we were going to press go, and then we're like, hey, now all this 15-year stuff applies. So we picked up an extra $1.5 million of depreciation in 2019. And now, rather than carry this net operating loss forward for infinity until it's used up, we're going to carry it back for the last 5 years, and we'll use up about half of that. And so multiply 750,000 times, we'll give them an effective tax rate of 40% for federal and state. As soon as those returns are processed for both federal and state, he's going to have $300,000 of cash flow that just suddenly appeared.
Got it. And so the carry back, you are going to have to amend the returns that you've already filed to get that. Essentially,
Yes.
correct? Okay.
Yes. So there's some work and some cost involved
Sure.
of having having your CPA, having me come in and amend these returns. But I mean, to accelerate 750,000 of this $1.5 million loss to today, when you need that cash,
No, that's a
depending.
price you'd be willing to pay.
Oh yeah,
Easy.
yeah.
Um, as opposed to waiting into the future. I get that. That makes good
Mhm.
sense.
Yeah, and so those are probably two of the biggest changes that came through in there. Um, they've also uh, clawed back on the um, business interest expense limitation. So what happened with the Tax Cuts and Jobs Act, because it had to remain revenue neutral in a sense, they could only take up to a $1.5 hit to the national debt and reconciliations. The things that they tend to cure that was this interest limitation. So what it would do is limit the amount of interest expense you could take in a given year to 30% of effectively what your net operating income is. So back off depreciation, amortization, and debt service, whatever that net operating income is, you multiply that by 30%. That was the amount of interest that you would be allowed to take. Now they've increased that to 50%, partially because they're expecting additional debt load from landlords to come on, as well as businesses, because this also applies to businesses. But it's also retroactive, so if you had limitations in 18 or 19, you could effectively go back and amend to solve that fix and free up additional interest expense that you may have been carrying forward.
So this additional interest. So if somebody did apply for an EIDL loan,
Mhm,
and you got a sizable loan, and you had
mhm,
to carry it forward for multiple years,
mhm.
am I understanding that business interest, you could use that to offset some?
Yeah, because you would have additional interest expense from this new idle loan. Um, uh, that would go into that calculation to where you would have 50% of your
Net
operating
operating
income
income. Okay.
would be eligible uh, for the amount of interest you could deduct. So as long as the total interest increase that you had if you were previously around that 30% limit was at least in tandem with what your net operating income did, you're probably going to be fine. Um, but the other thing though too is they do expect that with tenants potentially not paying rent or closing down for good, you're going to have a loss of revenue, and having that additional 50% increase there would help mitigate uh, the effects of that loss, because otherwise, uh, because if you don't limit those losses, um, if 100% of the interest is deductible, then that interest is then allowable as a loss in the current year to be carried back to the last 5 years. And so making sure that we know what's happening in 18 and 19 and now and forward looking into 20, if we're able to structure the debt and structure the interest expense the correct way, um, and realize all of that loss in the current year, that's going to free us up to go back and amend for what we call a net operating loss carryback, NOL carryback, and free up this cash flow, get a refund of prior taxes for federal and state, depending on what the state filings are for you. And it could, you really could take advantage of that and even use that to pay off the principal of this loan in a year or two, um, when it comes due. Or if it's a PPP, if it's 30 years for the idle, treat it like another mortgage, I guess.
Right. Right.
But
No, that's good news, and it almost sounds like in a way they've tried to make that, even if it's not a forgivable thing, but as to minimize the expense period,
mhm.
as far as the interest obligation on that, uh, in restructuring the business center interest write off, if
Mhm.
you have to end up taking that EIDL loan. I think there's going to be a lot of pain yet to get through. I mean, we've talked about, I think, the businesses and the tenants. I know, multifamily and single family tenants. I mean, I think they're going to need a place to live,
Mhm.
so they're likely to continue. But I've started to hear a lot more about some commercial tenants that basically thrown in the towel. Based
Yeah.
on the circumstance. And I think so. There's probably, what I'm picking up on is there's likely to be some vacancies
Mhm.
that a couple of weeks ago nobody would have expected.
Mhm. Yeah,
So
I've well, one of my real estate clients who's got a mix of multifamily and commercial. He's saying probably half of his commercial tenants are going to be leaving. There, it's in a smaller town, um, so higher risk uh, portfolio there for those small businesses. But they're outside of this. If it was like a 2008 disaster, these people wouldn't be leaving. But because of just the fact that they have to shut down, it's been really tough for them. The the At least from talking with my clients, they're saying that they don't expect to see a drop in their multifamily revenues as much as they would in their commercial, just because, like you're saying, people need a place to live. That's one of the last things that people are going to give up on is their house, because they don't want to be homeless on the street. They there's that they have that self dignity of work that they want to have and maintain for themselves, um, and be being able to contribute to society, even though they're stuck in their home right now. And I think there's really, I think once everything wakes back up and we get a month or two to kind of normalize things, I I think we're going to come roaring back to where we were, in my opinion. It's just a matter of when that date comes.
Yeah. Well, that's certainly the hope. I think that things come back. I think the unknown is just, what's the damage to the psyche?
Yeah.
Uh, will people become, will they race back? Will they be cautious? My hunch is that it'll be a mix. I think there'll be some that, fire right back up because the demand was there. They just got, shut down. But I'm picking up on enough that I feel like there might be some staggered comeback just from, and it's
Hmm.
probably sector specific. I mean, you could argue that maybe if that's the case for some businesses, maybe they weren't, um, well enough capitalized to handle an event like this. That business may have been tough the way it was. So
Hmm.
uh, we'll see. Anything that you'd like to add or summarize here before we wrap up? Just as far as the CARES Act and the different programs.
Yeah. For at Aldrich, we have, if you go to aldrichadvisors.com, we have on the top banner of the homepage, there's a link to our COVID-19 Resource Center that has a multitude of articles, information, etc., on some of the tax changes that have happened, uh, guidance on the SBA process. I'm probably more attuned in the tax side, but we have other people in house that really know this SBA stuff, and they've been great on this, as well as other employer resources for dealing with some of the other things that happened in the stimulus 1.0 and 2.0 packages. Since we're in the CARES Act was 3.0, um, uh, dealing with family leave, sick leave type stuff. They've our benefits practice has a really good handle on that. Then also our technology company that we have that is kind of like a outside for hire, uh, um, what do you call it, help desk and IT consulting for security, as well as the systems and what have you. Uh, they're able to help businesses set up to work remotely if that's something that they need help with. So we've got a multitude of resources there to come in and help with. And uh, if anybody has questions, they can also just email me, and I can refer them to whomever that
What's your
person
email
is.
again? Let's put that
It's
on there.
Yeah, it's J McGuire, JMCGUIRE at Aldrich Advisors, ALDRICH advisors.com.
Got it. All right. Well, hey, Jonathan, I appreciate you taking some time to go through this. Like I said, there's tons of information out there, and it's changing moment by moment, and trying to keep up with it has not been easy. So I appreciate you kind of sharing with us your take on it, and I think this provides some clarity, and I'm sure the listeners will appreciate that. Um, Till then, or till next time I see you, be well, keep safe there, and we'll talk to you soon.
Awesome.